Huh?
Indian.
Yeah, clearing corporation. Okay.
That's right.
It is with the BSc, right?
Yes, it's a subsidiary.
Okay. Very good.
So are we live?
No, we will be live in about another minute's time.
Okay.
Has Anjali joined?
Two more have to join, right?
Yes. In case she doesn't join, we will anyway start the session and maybe you can go on with your introductions and all, a brief about yourself, and meanwhile she'll join.
No, there is somebody from JM Financial, right? What is her name?
Radhika
Yeah.
Rajan.
Yeah, Radhika Rajan.
Yeah.
We'll wait for them to join because we have.
But once we are live, we have to start the session now.
Okay.
So,
Then give some 2-3 minutes perhaps for them to join.
Before you go live, yeah.
Yes.
In fact, I saw her. She was doing a preview. I was just watching, so she should be on.
Radhika and one more person, right?
Radhika and we have Anjali Singh. Anjali Singh.
And one more person.
No. So Radhika Rajan, yourself, Devika Shah, and Anjali Singh. Four of you.
I think
somebody has joined, I think.
Anjali is joined.
Anjali has joined.
Yeah. Arunam is there. That's somebody else, I think. Okay.
Yeah. So should we start the session now?
Okay, have we got everyone? I think we're still waiting for just a minute.
Radhika, I think.
Yeah, Radhika isn't here. So we'll give it a minute.
I think we're already live. We should start.
Okay.
You're the boss, Anjali. Whatever you say, yes.
Okay, sure. Let's start. And I hope Radhika will join shortly.
So
go ahead.
Good evening, ladies and gentlemen. A very warm welcome to Global Annual Women Economic Forum 2021. The discussion for this evening is the digital disruption of financial services. It's my pleasure to introduce to you today to our panelists. We have on the panel Radhika Rajan, Executive Vice President, DSP Investments, Professor R. Vaidyanathan, Retired Professor of Finance, IIM Bangalore, Devika Shah, Managing Director and CEO, Indian Clearing Corporation Limited, ICCL. And today's moderator for this session is Anjali Singh, Managing Director, Deutsche Bank. Over to you, Anjali, for this session.
Thanks so much. Thank you, Nidhi. And welcome to all the panelists who are here with me. Like you mentioned, the subject today is the digital disruption of financial services, which is a very vast topic. So I think we're going to only be able to sort of put a drop in the ocean in terms of, our thoughts and views around this. But just to set it up, I want to, rewind it a bit and say we are in the middle and have been for some time of what is being called the fourth industrial revolution, which is the digital revolution. That has actually been touching all aspects and all areas of industry. But I think the financial services sector has been more disrupted than some of the others. And it has been the object of many innovations in recent years with significant impact on consumers. Banks have had to rethink, and I'm from a bank and I've been a banker, that's why I'm talking more about banks, but I think what we'll discuss today is a wider array of financial services. But if you think of, typical retail, banking and how people used to do branch banking, that has changed completely. Today, retail banking is conducted more in terms of, internet banking, mobile banking, and all of the rest. After you've opened an account, and some banks are now thinking even for that, how you don't need to make a visit to the bank. You can do that on your mobile or through your net banking, through your internet. Beyond that, I don't remember the last time I actually visited my bank unless I go to my locker for something. And I'm wondering how digital lockers will come into place for some of our hard assets. Combine that with what happened now in the past year and a half or close to 2 years. We had all of this, digital revolution going on. We had not just traditional banks, but we have fintechs and we have the big tech who are all now playing in financial services, especially in the payment space. And then the world went ahead and saw the greatest pandemic of all times, which we are unfortunately still living through. Hopefully the tail end of it now, fingers crossed. And that accelerated the whole digital journey, because even though some of us, some of us older people who hadn't learned how to do internet banking or learned how to, use the mobile for a bunch of different things, were forced into that suddenly, because it became a pandemic that disrupted the world globally at every level: economic, financial, social, medical. For the first time, the whole world was operating from home. Look at us today, we're in this conference and a lot of us are sitting in our own homes and doing this, which was a little unheard of. If you rewind 2-3 years ago, this would be in-person conferences. So if anything, the digital journey got accelerated because of COVID. COVID's almost become a catalyst to take that even further, especially for financial services. And I know I just had a keynote, so I'm going to cut to the chase and I don't want to take too much time, but there are 4 or 5 things that I think have been going on in financial services that we can talk about. The first one is fintechs, which are now driving a new business model. And there is always this, is fintech a threat? Should we collaborate with fintech? Should we acquire fintech? What's the right way for a bank and a fintech to work together? Fintech is essentially the convergence of technology with finance, and that results in the emergence of various innovations. And the biggest technological impact has been on the banking industry, which is now helping and driving financial institutes to create better consumer experiences. Fintechs have created all those beautiful apps that we can use on our mobile. Then digital banking. What does it mean? Digital banking is mobile banking, wallets, payment applications. They've become a crucial mechanism for engaging with customers. Blockchain. Very interesting topic, especially given how, just about 4 or 5 days back, the government has had a different, has had a slight change of stance on cryptocurrencies. So historically, cryptocurrencies have been viewed with caution, especially in India, but globally, they have taken the entire banking world by storm by providing consumers with yet another option of thinking of how to do financial transactions. AI and machine learning, they are used all the time in banking for consumer predictive behavior, prescribed analytics, and those have become the way that bankers are now thinking of how they package and create solutions for customers. So there's so many digital disruptors. If you made a list of the top 10, financial services companies 10 years ago, you would have had European and US banks. If you do it today, a lot more Asian banks. If you think future and say, what are the top 10 financial services companies going to be 5 to 10 years from now? You probably have Google and Amazon sitting there as well. So, with this as the backdrop, I want to start with our panelists and ask them, a question which is pretty wide, and each one of them would love to get their view. I wanted to ask, and I'll start with you, Radhika, would like to ask you of, what is your view when you think of digital disruption in financial services? What do you think has happened, and where do you think, we're going? Thanks.
The interesting thing about the fintech innovations are that it's mostly occurring in startups, and it's not, and the incumbents is not the space where the origination of innovation is actually happening. And the reasons for this are plenty. If I can just pause, Anjali, and give a definition of what fintech is really. This is from the BIS's FSB, the Financial Standards Board of the BIS. It says, fintech is technologically enabled financial innovation that could result in new business models, applications, processes, and products with an associated material effect on financial markets and institutions and the provisions of financial services. So this is a very encompassing definition, which includes all kinds of financial institutions of any size, shape, regulatory, and all kinds of products, regulatory status. Why is this occurring in the startups and not just innovation coming out of the startups, and not just in India, but actually in the rest of the world as well? This is because the incumbents have legacy architecture, legacy systems, legacy networks, legacy interactive things, and also a culture. Whereas the startups have been enabled in India by the India Stack, which is a public good, which the government has created, which has enabled to create, and essentially developments and continuous progress in maturity technologies, especially of APIs. Now, APIs are basically standards that enable different pieces of software created by different financial institutions to interact and exchange data in a secure environment. They enable comparison, competition, recognition, and understanding of white spaces and underserved and inefficient spaces. And these are the main reasons that the startups are able to build innovative products very cheaply and easily. And then we have this whole funding infrastructure, which consists of foreign and domestic private equity funds, HNIs, family offices such as ourselves, and a whole bunch of other funding platforms which can enable the growth of these. And of course, we have the whole bunch of talent in India, which the younger people seem to want to join startups rather than established institutions.
Yeah, I agree. When I think of the new generation, I keep joking with my son that when we graduated, banking was a very aspirational career to have. I think now they're lining up more in front of the big tech companies and of course with the startups, especially in India, which is such a big startup hub. Absolutely.
That's right. In SaaS, for instance, India is only second to Silicon Valley now in the whole world.
So I think, Radhika, what you're saying is from the digital disruption, you think fintechs are playing the biggest role in it, so to speak, right now?
Startups, yeah.
Yeah, okay,
startups are playing, and the banks are picking back, the established institutions are piggybacking off these startups and partnering with them. For instance, if you divide fintech startups into the traditional payments, lending, credit, neobanks, insurtech, wealth tech, neobanks, because India doesn't have a separate digital licensing bank regime, have to basically partner with banks. And for instance, all these, the insurtechs, the creators such as Acko, they're registered they partner with all the financial companies. Of course, the insurtech aggregators and distributors are all across, like Policy Bazaar, and so on and so forth. And, but, let me just give one example of what I think is a very interesting and really innovative in the lending and the credit space. And this is a company called Cred Avenue, which we first, in our family office came across because through an investment in a fund. And it is a platform which matches, buyers and lenders as well as issuers in what was hitherto a very, very opaque and manual marketplace. And this has already about 200 lenders. It has about 1,000 issuers of debt. And it enables debt of all sizes. There are SMEs on the platform, larger institutions, corporate lenders. So this is the kind of innovation which is only possible through a startup. Like a large institution can piggyback off it and efficientize some of their operations. But it's for instance, it's a huge disruptor. And once again, we can distinguish between disruptors and people who are just enablers using technology. And all these people in these various, in these five categories of startups, they have different issues with monetizations. In wealth tech, the broking space, people like Zerodha and Grow, etc., have already disrupted the whole broking space, the discount broking space. They have about 40% of the market. The payment companies are still facing issues with monetization. They really have to expand. They have a wealth of data with, especially the ones like Razorpay, which are between the borrower, between the merchant and the consumer. They have a wealth of database. They are going to monetize it. But what do the Paytms, etc. of the world do? How do they exactly monetize and get profitable? So each of them face different issues. Each of the five categories face different issues. But one thing I can kind of say for sure is they're all set to grow. Payments have already grown 5x.
Payments is, yeah, absolutely. And out of every 10 transactions that's done in banking, 7 are payments, right? So 7 transactions are payment related one way or the other. That's why there's so much innovation in the payment space. Thanks, Radhika. Devika, from your point of view, and I know you come from a different financial services background in terms of, the role that you play. Would love to hear your thoughts on how you think this whole area is being disrupted and what's coming and what we can expect.
Yeah, thanks. So I come from the stock exchange space. So let me tell you a little bit about that space. So I'm in this industry, say, for around 30 years. And I remember, before we did electronic trading, there used to be so much paper, physical paper, share certificates. And if you remember, there used to be a trading floor where there used to be people actually trading.
Bits were passed around all the time. I remember.
Yes, and we used to have that big trading ring, which we used to call, and so we saw the winds of disruption right back then when technology took over, and we moved to electronic trading, and then you had dematerialization, which came up. So basically, the physical part of the paper started getting eliminated, and everything became electronic. And now, cut to the present, we obviously what has happened is in the last few years, the internet, the smart technology, the mobile phones. So what has really changed, I feel, is the smartphones, whereby now that everybody has it in their palm, everything is so easy for them, whether it's banking, whether it's trading, whether it's any sort of services that they want. All they need to do is just have those various apps, and there they are. So the way we look at it is, that the large behemoths that we call the large industries. So previously, because of their size, they used to have, they had the market. But now it is these startups, which Radhika just mentioned, and they have completely changed the entire space. They have entered the space. You have speed. They are very agile. They can quickly give you your services. They can adapt very fast to the new technologies. So that is completely, according to me, the biggest disruption that has happened. And I think it's already mentioned, payment solutions, the credit settlements, everything has now become so much more easier. People don't need to visit the branches. Everybody is doing mobile banking now. In fact, I'd like to share some statistics with you that India has an opportunity of digital payment market of nearly $1 trillion by 2023. That is what it's just recently been said. And we are emerging as the fastest growing fintech market and the third largest fintech ecosystem in the world. And in the last decade, there has been a plethora of innovations. And as per RBI, there are more than 4,680 fintech firms in this country with various business models. So you can just see what the whole gamut is. It's a huge gamut. It's a big disruption. And definitely it is the way to grow forward is fintech. I mean, I don't see anything going backwards. It's just a way to move forward.
Not big tech. We shouldn't be worried about big tech. I know you and Radhika, we worry about the Googles and the Amazons and the everyone else who's jumping into payments. I will ask Professor Vaidyanath that question as well. How is the big tech going to be a big because once they start playing in financial services with their data, and they have so much consumer data that they're sitting on, they're going to become an even more powerful competitor. I don't know what their appetite will be to play truly in financial services because they are used to being not so regulated as other fintechs, right? And so that's going to be sort of, we'll go there in a little bit after I hear Dr. Professor Vaidyanath, that as a regulatory environment comes in, the fintech freedom and agility might start diminishing because it's what's going on with crypto, right? Now we want to regulate crypto or blockchain. And therefore, a lot of the fintech nimbleness and agility is because it's much less regulated than a true bank. So, yeah. If I can now just pass on to, Professor Vaidyanath, over to you, because I know you come from a very different, perspective of academia. Would like to hear, and I was reading that just recently you, talked about crypto. So would love to hear your views on, how this whole industry is being disrupted by digital.
Thank you, Anjali. When Sandhya and our friend Lakshmi were telling me I should be part of panel, I never visualized at my age that there will be 3 roses and 1 thorn, right? Getting into and now, of course, with Nidhi, it is 4 roses. The financial service industry in India is very interesting, actually. I have been associated with it for the last Believe me, 40 years. I've been every possible committee of SEBI, NSE, BSE and other thing in those days. Anyhow, so something very interesting has taken place over a period of time. Some of you may not be aware of it. First 89, 90, there was Rangarajan committee to computerize banks. I was part of that, and so much resistance for any type of computerization. Gurudas Dasgupta was the, many of you might not have even heard about him. He was the trade union leader, CPI. He is no more. Very fine gentleman. So we had a conference at IIM Bangalore. We had a sort of a closed door meeting. He told me these are all for the classes, not for the masses. So we will oppose it tooth and nail. No computerization, nothing. I try to, explain to him, look, are you familiar with the ready-made industry? He told yes. When it came in the late 70s, everybody told these are for the classes, not for the masses. Ready-made is for the rich. And now what has happened, this was in the 90s, is actually ready-made has become the common thing. People buy this, 150 rupee t-shirt, export reject, import accept, all sorts of things are there. And stitching became very difficult. To locate a tailor is a problem. And if you stitch a suit today, for instance, income tax comes to your home. So that type of issue are there. So over a period of time, banks expect you to come through this ATM network, phone and other thing. And I am told, if you visit a bank, they charge you today, some foreign banks, to physically meet a human being, because you are, some recorded message always comes. He says that, press 1 for English, press 2 for Hindi. And if you are existing customer, get lost, because we are only interested in new customers. So that type of thing, you find that the entire, technology focus has facilitated the masses to get into. Actually, the classes are not, they sometime have to visit the bank and other.
That's now being called private banking. Absolutely, Professor.
Yeah.
Vaidyanathan.
So it's a very interesting thing.
You
Call it personal and impersonal banking and whatever name disruptionist has caused. So what has happened over a period of time, there is not going to be any bank in another 10 years. Banks are dead. Anjali, not bankers. I'm talking about banks. Banks are dead. This will be the bank.
In 10 years, it's fine.
This will be the bank, right? But after that also you have to use the bank services. You may not be a banker. You will be on the other side of the fence, right? So that is one thing which is going to happen. Second is, again, going back in time, we had 24 stock exchanges. Of course, there was a big debate in those days in the 90s, whether it is 23 or 24, because ministry used to say 23 and SEBI used to say 24. SEBI was just started that time with Ramakrishna. Anyhow, and then there were 144 unrecognized stock exchanges in the country. There was a committee in which I was involved to, recognize them or whatever you call it. Fortunately, by then the NSE and the BSE bolt has come and all of them have folded up. There is no more outcry system. Incidentally, India is the only country in the world, let me underline the only part, where 100% of transactions in the share market can be done only through the software. Outcry system is completely gone. Japan has kept outcry system. Can
I just intervene? We did that in 1995. So we are pioneers in that, in complete outcry. Yes.
Completed. So, but others, why Japan has kept, when I was in Tokyo, I asked them, why have you kept this outcry system? They say it is, many people feel we would like to see the seller or the buyer. The knitting of the brow and this facial expression will tell how serious he is. This is completely 100% impersonal, doesn't communicate anything. Anyhow, so this is something which is, my own forecast is, not wish, let me tell, forecast, in another 5 years, stock exchanges will also go. Because what is the role they play? Nothing. They are intermediary. For every buy, they are sell, and for every sell, they are buy. And they have this fund to meet the obligations in case there is default. That customer protect, investor protection fund, another thing. So with the blockchain and with the type of technology emerging, if we could take care of the credit rating of the transactions, then stock exchanges are not actually required. So there is a huge, what I would call changes coming in the thing. India is not an innovator. Let's be very, very clear about it. We are adapters. None of the major things we have innovated actually, but we adapt it very well, like having 600 and 700 nearly, smartphones, and so we quickly jump into that. But
And
there
now
are two words of caution I would like to mention. One is all this technology also helps in reducing corruption, incidentally, like the railway reservation system completely eliminated the role of TT in my travel. I don't have to bribe him in order to get a seat and another. Similarly, passport. So that's the one dimension. But in the financial services, major issue is twofold. One is we are, let's be very clear, we are a relationship-based society, not a rule-based society. Even today, if something goes wrong, the first thing people ask is, do you know somebody there? Whether it is an airline industry, whether it is a telephone industry, whether it is a banking industry, everywhere. Do you know somebody there? This is very, very important. But because of the and very large sized organization are not able to meet the obligations of ordinary customers. They give some phone number and other thing. Let me be very honest and frank. None of them facilitate you to reach anything. One chat box will come and you ask us, and then one drop box will come. And finally, I get a mail, kindly immediately send your grandmother's death certificate and your father's birth certificate, and nothing to do with the query I have asked, because they have a checklist of things which they have to. So the impersonality is something major challenge in our context. We are a relationship-based society. How to match between the two? That's one thing. The disruptive technology, we are not able to adapt as much as we would love to, even though we say that. The second issue is the distance between the issuer and the originator of a paper and the final holder decides about the levels of risk. The larger the distance, the greater is the risk undertaking that. Suppose in the traditional model, the money lender will sit on one side, the borrower will sit on the other side, pledge some bangles or jewelry and collect the money. That's all. Then there is he has complete knowledge about the borrower. Today, it is all, paper, current ratio, debt service coverage ratio, and all the things. And then they lend, and then they discount it to somebody else. And then one swap company comes and buys it. Then some insurer buys it. So finally, the one who is holding the paper do not know who is the originator and what are his real credit worthiness. 2008, one of the major
reasons what happened, right, in the financial crisis, because it went.
One of the major reasons is what is called the de-addict. This is a distance which is measured. How many times it has changed hands? There are some research work which has come out from NYU. Yeah. The longer the time it changes hand, the greater is the risk associated. So this is something which we have to keep in the back of the mind. In other words, it's not everything honky-dory, in terms of we adopt. There is no problem about it. Technology adoption is we are very good at that. Not technology innovation, adoption. We quickly take it and then adopt it. Like as I told you, the difference between masses and classes are sorted out in the ready-made to other. So this is the two areas I would like to caution. And incidentally, yesterday, university has been floated, which is for the disruption technology. Cryptowares.
So I know the founders of that.
Yeah,
so
I am actually on their academic council chair and board also. All right. So to facilitate the whole process, it's not going to be very easy task. Anyhow, and we would do really, but These are the two nodes of caution I am indicating to
Correct.
this group actually. And I am very glad actually all of the, this financial service industry in India. Incidentally, largest number of women are in Indian financial service industry. Nowhere in the world. You go to Europe, you go to a meeting of these
We
financial
don't
people.
see the same diversity stats in our bank, however.
Not diversity. I am telling you, in 10 years, chaiwala, liftwala, and janitor only will be males in Indian financial service industry.
I hope
3
so.
males will be
We all
there.
hope so. Absolutely.
That'll be a nice change.
Yeah,
It's
I
a,
know.
it's,
Well, look at this panel,
know,
right? I have, two dynamic women who are from financial services over
in
here.
the, it's a good thing. I am not complaining or anything. I'm only observing because a lot of my students of the 90s
Yeah.
and, 80s and 90s are all in very good position globally. In
Good.
large number of financial institutions. They are doing very well actually.
So,
And India number wise, we are the largest women oriented financial service industry. It's good because there are so many other, we are not going to get into that. A lot of research has found about the nature of their dealing with the compassion and so many things. Anyhow, so this is something very,
I
very
just wanted
interesting.
to, go into two other areas. One was we touched upon it very briefly. What do you think is going to be the regulatory sort of impact, and how do you think the regulators are going to, at some point, with the startup culture, with the fintech culture, as that crosses over and they start getting regulated, what can we anticipate? Will that
See,
slow it down? Will innovation stop?
one
So, I
important
just want
thing
to
about India is market goes ahead and regulator follow. This is very, very important. Take the courier industry. The Telegraph Act was amended after 2 years after couriers got into the field and, doing the courier. They introduced some regulation like up to 10 gram, 15 gram, all the, of course, I can mention most of the regulation is for rent seeking. This is also another thing in India. It's a corruption, which is the basis of many of these regulations, particularly at the state and municipal levels. Your Food and Adulteration Act, Shops and Stores, all of them are, you name me one regulation, it is meant for bribery.
So
this is
from your
private
point of
airlines again, Anjali, you should remember, I was traveling in a private airline with an MP next to me. I asked him, you are heading a committee to finalize about the introduction of private airlines. He was smiling at me. We were traveling already in the private airline. So the regulations and these laws come much later than our society and our people are far ahead actually. They would move ahead and
And especially for crypto. So Radhika, Devika, I would love to hear, what do you think will happen to blockchain? I think globally it has been embraced. Almost every bank is now talking of digital currencies. In India, we're still a little on the fence, but where do you think that's going? Because that's going to probably be the biggest disruptor possible if we do get into digital currency and that becomes a way of peer-to-peer lending or even more, right? Love to hear your views on that, Radhika, Devika.
Devika, would you like to go first?
Oops.
Go ahead, we can hear you.
Oh, sorry. Can you hear me?
Yes, we can.
Okay, so so blockchain is something that, when we come to the exchange space, I will talk about that space. World over, no really exchange or clearing corporation has as yet adopted blockchain technology. We are still waiting and watch. I would say it's at a very nascent stage, at least in this industry, because a couple of reasons are many are skeptical about, the security is one of the biggest concerns that we may have, and scalability is another thing. And whether and how this will fit into, this is a very regulated environment. So really how it is going to fit into it. So as of now, blockchain is really not looked at, but I'm sure slowly things will change, and I'm sure it is very soon going to come into this space also.
Okay, but the young generations, if I think of the, Generation Z, it is all about the cryptocurrencies. If you think of the investors also, globally, even in India, the people who are investing, it is mainly, the younger people who really believe this is the future, because that's how they think, that's how they're sort of wired.
Yeah. So, cryptocurrency, of course, as we all know, it's really a non-regulated space as of now, and we will have to await what regulations will come and whether that would, if the regulations do permit this product to be officially traded and regulated, then I'm sure we will be definitely we will look at it as a product, because all products that are approved by SEBI, they would be offered on the exchange platforms. So yeah, that's the way we look at it. But as of now, being unregulated, really we are not looking at that product.
Got it. Radhika?
Well, if you're talking about cryptocurrency, I don't see it as anything more but another trading instrument, another asset in which one can diversify. But if it is, issued by the central bank of a country, like some kind of a crypto or digital rupee, then I think that it can be quite enormous. For instance, smart contracts. Why not think of blockchain, paying your income taxes? There are so many things, the whole GST chain, et cetera, which can be done. But I just don't see it as something which is anywhere near on the horizon. Of course, sometimes events just happen much faster, but it's kind of hard to see. And given the volatility and the power requirement for crypto, et cetera, it can't be anything else in the very next 2-3 years or 5 years as more than just another kind of investment product, especially for individuals who can take that kind of volatility. Because last year we were told that, one of the questions that we in the financial markets talked about is, why is gold not appreciating, inflation, all these things, why is it not appreciating? And we heard that a lot of family offices all around the world were putting part of the allocation that they used to put for gold into crypto. So it's just another investment product. It's another source of diversification. So, blockchain, of course, is a totally different thing. It's already being used.
Yeah, but I think the energy required to create these, cryptocurrencies is so big that I was reading somewhere to create the number of, I think, blockchain, that the bitcoins that are there in the world is the amount of energy one of the Scandinavian countries uses. So that will be a limiting factor for sure if we want to go there. And I'm coming back to a question that I kind of touched upon. How should big tech and fintech, be regulated? What is the way forward? Because right now it's such a great space and the fintechs have the ability to create and innovate because they are unregulated. Should they come in, and this whole debate of how regulated will finally digital currency or cryptocurrencies be, India being case in point, we are right on the border of that. China has banned it. So, that's a very specific example. But overall, what should be the regulatory environment for these big techs, fintechs, as they're now stepping into all of these payment, areas? Do you have a view? And when that happens, will they move closer to the banking sort of space? Because banks sometimes are handcuffed because of the regulatory environment that they exist in, and with all the to-dos and don'ts that they live with.
Anjali, who is the question addressed to?
Professor Vaidyanath, would you like to,
two things. This, of course, whenever we talk about blockchain, and immediately people jump into cryptocurrency. But I'm telling something more dramatic is going to happen. Blockchain is going to facilitate closing of all the tax events. This is something which is much bigger issue. Actually, not many people are focusing on it. India has got 1.5 trillion US dollar estimatedly at outside tax havens. So the blockchain is going to facilitate understanding what is called trade mispricing in terms of under invoicing and over invoicing. And 60% of the tax haven money is due to this actually.
So I think the skepticism around blockchain technology has been because of the security concerns. And how will it fit into a regulated, atmosphere? And so that's what I'm asking here. That as we bring in so first of all, we should regulate everything? The
only way we can go forward is something like BESL. It's sovereign state cannot by itself regulate many of these activities. we have been telling the government, we mean some of the people are telling the government that we must have a either G7 based or G20 based, centralized system to regulate some of these activities. The sovereign, the national regulatory framework is not inadequate totally for this actually. The way in which the financial flows are taking place, transactions are taking place, both the syntax as well as the blockchain would phenomenally be advantageous if it is done on a global scale. So I visualize at least in the next 3-4 years, there will be a global mechanism in order to have something like a, SEC, SEBI sort of a thing at the global level in order to regulate this thing. This is because there are also some genuine concerns about terror financing being facilitated in this process. So let's not try to, sort of brush it aside. So global level exchanges or whatever, regulatory framework will be one of the important solutions. Again, will China join it? Will others join it? Another thing is a, important issue. Anyhow, even if G7 or G20 initiate this, that would be a very good process. That would bring sanity to the market. And because individual level regulatory framework is totally inadequate. And let's be very clear also, most of the regulators, including SEC, many of them I know personally, and in India also, let's not, hide it. The knowledge level is not so much actual. Most of the regulators are in their late 50s, who are born in the period of, rationing and all these things. Actually, and who should be actually in the center for regulation? People who are in their 20s and between 20 and 30. You should put them.
Professor
Nobody is going to accept it.
That's another kind of bias. Yeah.
Many of them, it's not a bias. Many of them are simply not having any knowledge about what is happening in the technology
that's
field.
A different thing. I think that's about keeping up and being future ready and upskilling yourself. I wouldn't want to put age as the reason why you can't. Very conscious of that. I do think, and this is the last thing on this before
age. What I mean is the youngsters are much more advanced and much more knowledgeable.
Gen Z people are like far more, they are technology natives, right? They're digital natives. We have been digital migrants, including us. We've had to learn digital skills as we entered our 30s and 40s. Whereas if you look at my 23-year-old son, he's literally born with the phone in his hand. It comes like second nature to him. So we understand that.
So unless a globalized regulatory framework comes forward, I'm worried this AI as well as technology companies will completely override the sovereignty of the countries.
And also the other thing is the whole, touch with the consumers, because with the big techs and the amount of data that they have, right? The main threat is that the consumers will control the big techs will control the consumer interface. So Radhika, when you're thinking of your customers as a big tech player comes into the space, is that whole customer recall, because the customer starts thinking it's using Google Pay and it's using Paytm. They don't really understand that the payment gateway at the back is still the bank and very much the financial services systems kicking in. So those are also the sort of threats of where this disruption is going, the direct connect with the consumer from a financial services banking perspective. What's your view? And I'm going to add the last question to it, which I'll ask for each of you. And as you think of this and you think of COVID, what's your view on where we're going? So where are we headed? So if you think 2 to 3 years out, where do you think we'll be? And the Generation Z is coming up, which is going to become a large part of our consumer, audience as we move forward for financial services. Thanks. Radhika, over to you.
If I understood your question correctly, Anjali, what you're asking is that, who owns the customer?
Or even if the customer is owned by the bank, the intermediary could be one of the big tech or a fintech. And so from the customer's point of view, he doesn't think he's using Visa or Master. He thinks he's using, Paytm, though at the end it's going to your credit card, right? So it's like consumer recall, so to speak.
Well, I think that, if I could just give an anecdote, which is kind of related to this and what Dr. Vaidya was saying. I was in New York, which happens to be my city, just about 4 or 5 weeks ago. And one thing which struck me, I noticed actually in Manhattan, almost every block has a bank branch. And this is in the, in New York, which are the most advanced technologically. And, I had to do some dealings with a personal banker. And so I was saying, how come? I thought you guys are cutting down on branches. How is it that every New York block has a? And he said, well, you really need that. You still need that very personal touch. And I think all institutions are trying to basically establish that personal connect with the customer through technology, whilst piggybacking off, the fintech startups or anything of the kind. The real threat that you were referring to earlier is like really the Googles and the Amazons. Now, here's a question. Some 20 years ago, I think one of the top city bankers, I forget his name, said something like, my real threat maybe 25 years ago is not Chase or JPM or any one of these other people, but it's really Microsoft. And at that point of time, Amazon wasn't so prominent, but it's really Microsoft, something like that, he said. That hasn't happened, has it? I mean, of course, people like Amazon and so on and so forth have eaten away into that kind of space, but it hasn't happened completely in the way that, actually I thought at that time, 20, 25 years ago, I didn't think I thought that, yes, Microsoft, Citibank is not going to exist. But it has, and but it hasn't because, and I bank with Citibank, and I still, I feel shackled sometimes, but I can't get out of that sticky relationship. Maybe it's a reflection of my generation. I know that a lot of the Gen Z people are not involved in it. So I think that, if you're in that kind of space and you're looking at who's your customer, your future customer is the Gen Z customer, the Gen Z for the next 20, 30 years. And does it really kind of matter to them? So does it really kind of matter to them, or is it all transactional? Today, I was with a startup, a fintech startup, which basically customizes portfolios, and you go in there, and it basically says that, look, there are a particular kind of investors who don't want to get very actively into picking the stock or the security or this debt instrument, but they want to invest, and they want portfolios, ready-made portfolios. So they offer different portfolios made for different elements of risk. And these are for people who don't really want to interact with other people. You just want to be able to get in and be told that this is your risk profile, and therefore we suggest this, and you please invest in it. Of course, it democratizes this. So I think, if you're asking what I think is the way of the future, I think it seems to be that actually. It seems to be like a two-part thing. One where there's a very high-touch kind of element, and one where there is this kind of impulse.
It's like what Professor Vaidya said earlier, that maybe the masses will actually start going to the straight through processing, STP. It's a big metric that banks like us monitor very carefully. What's our STP on payments? We actually have targets around that, so which is important. But I think, to your point, the bespoke solution has to always exist for customers, and the human interface also has to stay. That's interesting. Devika, what do you think?
So the way I look at it is, most of the intermediaries now are getting eliminated. I think we are finding that in most of the industries, because what's happening is that there is now a direct connect between the fintech, maybe a fintech, or in my case, it's the exchange, and the final customer. And now, so the distribution model, the digital distribution model is what we are finding is taking more and more prominence over all the other models. And if you will see, you will have mobile apps directly selling you insurance, mutual funds, stocks. You will have the provident fund, pension fund, everything. So and as what I'm finding is that now the direct connect with the customers is going to happen with the fintechs, and there is going to be the intermediaries are really the sufferers in the whole thing, and they will really have to start either merging or, this is a competition. So they will have to start collaborating, merging with the big ones, or they will have to look at different business skills, or they will have to really pull up their socks and get into the technology bandwagon. This is the way I look at it. So I look at customers really now directly dealing with the big ones.
Right, interesting. And especially, I think, as the customer, profile changes, because that's also happening as we speak.
Yes, in fact, as we see the customers now, they are a very young population. They're very tech savvy. And
Especially in your space, right? The investor.
Yes.
I look
especially
at my son and his friends, they're all investing. So I think if you have the ability, they're investing. Whereas we woke up a little late in life to start thinking of investing. I'm in banking, which was surprising.
Correct. Yeah. But otherwise, if you see mutual funds, insurance, everything, everything is now available through mobile apps. So you don't need to visit any of that. So exactly. that is the way I look at it.
Yeah. So, and do we have questions, Nidhi? We can take questions if we have any. Otherwise, my last question to this audience is, I can just go with that. Nidhi?
Yes, actually, there are no questions, so you can go ahead.
One point I want to mention. Can I?
Go ahead, of course. Go ahead.
You were telling about the future thing.
Yeah.
I visualize two things. One is the really rich is going to opt out of the technology. They will not be part of this telephone, internet, and other thing. Because I find in Europe as well as in India, the real rich don't go to the big four or anything to manage their affairs and finances. Home office is given to individual brokers who are trustworthy, who have been with them for a long period of time, chartered accountants and others. So all this technology thing is going to be for what you may loosely call the classes, cattle class. The real rich will opt out of it. They are not going to be part of this, actually. That's one. Second is, there is something, why they will opt out also, I will tell. Neurobiological finance is becoming much more important these days. It's not behavioral, it is neurobiological. Ramachandran at San Diego is working on it. In other words, your risk appetite is linked with your genetic structure, believe me or not. Huge number of people will, pounce on me. Normally, I'm politically incorrect. Over a period of time, I've been made correct, actually. It is connected to your gene structure. So, your asset classes to which you should invest is also linked with your health. To put it very mildly, if your BP is linked with Sensex, you have to be very careful. When Sensex goes down, your BP goes up. Inversely related is. So the neurobiological finance suggests in 10 years, the investment counselor will come with a doctor and then tell, given your parameters, don't go for lands or, something like that. This is what is going to happen. So, which means the personalized individual basis asset preferences have to be identified. That means those who can afford, they don't go for the mass market. Those who can afford, they are going to go for the class market. They will also opt out of technology. So this is what is expected to be, the prognosis for the future. Okay.
So one question for about that. But doesn't fintech innovation democratize that? For instance, I was talking about this company, which if you sort of become a member of that company, put in all your bio information.
Yeah, I agree, Radhika. Anything which democratizes, democratic method, social justice, diversity, whatever word you want to use, right? That would be for the lowest common denominator. Let's be very clear about it. Okay?
Yeah, absolutely. Nidhi, are we at time? I know you've come.
Yeah, we just have 2 minutes more if you guys want to say anything. Otherwise, I'll start with the awards.
I'll just thank everyone. Thank you for your time and thank you for your thoughts and discussion. I think it's a vast topic, but felt enriched by hearing your views. It's we didn't get too controversial. It's also a subject that can get very controversial. I think if you start debating some of these things, and we didn't get into the AI, machine learning, or consumer analytics. So all that's also coming in the future. But thank you again. Thanks Radhika, Devika, Professor Vaidyanathan, and thank you Nidhi for being our timekeeper and for sharing this with us. Okay.
It was lovely to have you all with us today, and it was so insightful that as a consumer, what challenges, and from the back end side, listening to what challenges you guys are facing, it's really amazing to hear everything from you guys. We have not thought about in that perspective. As a consumer, we never think about what challenges you guys are facing. So it's an eye opener, maybe to hear something like that. Thank you all for joining today. So now it's time to announce the WEF Awards. So Women Economic Forum confers upon Radhika Rajan the Exceptional Leader of Excellence Award. Congrats.
Oh, thank you. Thanks very much.
Congratulations, Radhika.
Thank you so much.
Thank you. Thank you
Yes,
all. The Nari Brigade of the
We
future.
honor Professor R. Vaidyanathan with Leader of the Decade Award.
Oh gosh.
Congratulations, sir.
Congratulations.
And
Congratulations.
Women Economic Forum confers upon Leader of the Decade Award to Devika Shah. Congratulations, ma'am.
Thank you.
And we present the award of Leader of the Decade in Innovation and Leadership to Anjali Singh.
Thank you. We're also lucky we've all got an award here. So
Yes, we are all-
congratulations, everyone. It's great.
Thank you
So
very
thank
much.
The
Thanks,
awards
Nidhi.
will reach
Thanks
out.
for your gracious.
Reach you digitally via email by a fortnight. And thank you all for joining us for this wonderful, wonderful session, and hope that we'll have more sessions with you guys in future.
Thanks
Thank
a
you
lot.
so
much.
Thanks, everyone.
With this,
Take
Thank
care.
you. Thank you, Anjali. Thank you, everybody.
Thank you,
Thank
Anjali.
you,
everyone. Thank you, Anjali.
Devika.
Fantastic
Thank
moderator.
you, Radhika. Thank you, Nidhi. Okay.
Thanks,
Goodbye.
Nidhi.
Thank you,
Thank you very
Forward, everybody. Right? Okay.
Okay. Okay, sir.
Thank you. And
Bye.
God bless all of you.
much. Thank you.
Thank you.